webinar. Once again, thank you for being in here at this hour of the time. Okay, so what is Networking and Learning Group and who has founded this group? So it's Jason Abraham. He's an internal auditor and content creator. He works with a government entity in UAE, and he has 5S certification. He's very much into video makings and trying new technology, which in fact he teaches so many things, and I'm like really, oh, Jason has tried this, let me also try it, which is great. Thank you, Jason, for this. And myself, my name is Sushma Priju Pablani. I'm an HR professional, and I have a master's in commerce. I have diploma in computer science, and I'm an HR generalist working in a free zone in UAE. So we both started this group with an intention of sharing knowledge and learnings, the experiences, not only with both of us, but with many people across the globe. So we have different people joining from different countries. We have people from Bangladesh, we have from India, Pakistan, and Singapore. So it's a great journey. Till now, it has been 27 webinars, and today we are on 28th webinar. So we have learned so much in these webinars, with these meetings, with so many people around, their learnings, their experiences, which add so much of value to these webinars. And I'm really honored to have such an amazing platform and share with you the learnings we have. Also, if you would like to share something with us, then please do let us know. Please connect with us, and you may be the speaker in next few weeks. Thank you very much. We have more people within our team, which is Takyuddin Theparambil. He's a QHSC professional. He's MBA in HR, MSc in biotechnology. He's working in Abu Dhabi, and he's more into food control and quality department. We have another team member who is Anil Kunaku. He's an HR professional, MBA and MHRM. He's also a coach and a mentor. So they are also the pillars of NLG. We work together. So whatever you see, there is so much of coordination going on behind. As soon as we finish today's webinar, we have like lined up speakers for 3-4 weeks, definitely. But yes, okay, can you share this? Can you do this? What is the topic? What will be, how will it go? You know, all those things, which is really great. So why is Networking and Learning Group? As I shared a small brief earlier, so it is just purely a platform where we network, learn, and share knowledge with each other. And please come up so that you can share yours with us as well. You can join us on Facebook, LinkedIn, and WhatsApp. So we have 2 WhatsApp groups as of now. Or we can move it to Telegram. What do you say, Jason? Yeah, because we'll have more and then it will be difficult to manage. So we can move it to Telegram as well. Just a thought, suddenly it came to my mind.
In future, yeah.
Yes, sure. Okay, so what will be the rules to follow? So please stay muted so that participants and the speaker are not disturbed. We can take maximum from the speaker. You can use the chat box. You can put your comments, your questions, your likes and reactions. And the presentation will be given by the speaker, and at the end we'll have Q&A session. But in between, if you want to raise your question, you can raise it, but it will be taken at the end. You may take notes or screenshots as you like, so that you can refer to them later. Who is the speaker today? So the speaker today is Mr. Ramamurthy Pachayappan. He is a consultant, and he has been working with large organizations earlier. He's based in India, and he's joining us today to share his knowledge on finance. I would not say much on that because I want to hear from him what exactly he'll be sharing us. So he has been a software development, a project management consultant, and products development, products implementation, customer support. He is interested with the startups. And he has, when I was reading actually his LinkedIn profile, I never knew he has been a lecturer and a scientist. He has masters of engineering, which is great, great, great. And much, without much delay, I hand over the platform to Rama sir. Welcome here on this amazing platform. Thank you for accepting our invitation, and thank you for being here.
Thank you. Thank you, Sushma. Thank you, Jason. Thanks, Anil Kunuku and Takyudin. It's an amazing platform. Thanks to all joined here. Good evening and good afternoon. So today I'll be talking about personal finance, specifically about various asset classes. I used to work for corporates till 2014. In 2014, I came out of corporate and started doing my own consulting. So what happened is during my corporate working times, I really had kind of zero knowledge on the finance. So I really started learning about it last 4 to 5 years, and I see that many people who are in the full-time job, they do the same thing. They don't take time out to learn about finance, which is very, very important. The other important thing in life is relationship, how to handle the relationship. That also people really take it for granted and do not learn. Okay, so moving on, let's talk about the personal finance. Sushma, can you present the PPT? Personal finance. I basically, what I would like to do is that whatever I'm in the learning process. It is not that I'm expert or any such thing. I'm in the learning process. I would like to share my knowledge, whatever I gained over last 4 or 5 years with the people so that they don't wait till they retire or they get into something else. So it's better to learn about it as early as possible. So let's look at what is an asset. So I've picked up the definition from Robert Kiyosaki. Most of you might have heard about him. He has written many books. One of them is Rich Dad, Poor Dad, which is very famous. And there are many other books. The way he presents is very, very simple and straightforward. Not that it is very sophisticated or great or complete, but it is simple and practical. So hence I picked up his definition of what is asset. An asset puts money in my pocket. A liability takes money out of my pocket. So basically, whenever you evaluate whether something is asset or liability, use this simple formula. Does the asset give you money on a regular basis or not? If it gives, it is an asset. If it doesn't, it is a liability. For example, your house which you are living, if you are owning it, so it doesn't give you money, whereas you do spend on maintenance. So it is not asset, it is a liability as per Robert Kiyosaki's definition. But if you have a house and you rented it out, then there is a monthly rental coming up. Then there is a net flow of money coming to you after the expenses. Then it is an asset. Okay, so the other important things, few more quotes about the assets. Rich people acquire assets. The poor and middle class acquire liabilities that they think are assets. That's the crux of the whole thing. Most of the people, working people, they acquire assets thinking that they are assets, but actually they are liabilities. Like buying some huge car or buying the house, but not really getting inflow of money. There are so many other things, but this is the essential thing. So the people who are rich in the sense, the people who are knowledgeable in finance, they know what is real asset. But we can also know, all of us. The rich focus on their asset columns while everyone else focus on their income statements. So there is a difference. Of course, we'll briefly talk about the three important financial statements, which is income and expense, asset and liability, and cash flow. Those three are very, very important. I think it is important for each of us to learn briefly about them. So what he says is the rich people focus on asset. Once you buy the asset and leave it and basically make sure that it is fine-tuned to generate the flow of money, then it keeps giving you the money. But if you only work on income alone, income and expense, then you don't have that kind of income. That's what he says in that. Think of it this way. Once your dollar goes into your asset column, it becomes your employee. The best thing about money is that it works 24 hours a day and can work for generations. So that's the crux of it. When you get money that is not sufficient, how do you convert that money or income into an asset which generates continuous inflow of money is the essence of being financially educated or being rich or whatever you want to call. Moving on. So what is a prerequisite for one to be financially educated, to be in the path of becoming rich? Simple math and common sense are all you need to do well in financially. So that's all is required. Simple mathematics and common sense is what is required. Invest first in education. In reality, the only real asset you have is your mind, the most powerful tool we have. So this is all from Robert Kiyosaki and very simple and straightforward, commonsensical. Okay, so the other prerequisite for us to really get into the actual assets, understanding the assets and acquiring those assets is that these four things. So you should have emergency fund to take care of 9 to 12 months of expenses. Let's say you are out of job, you should have sufficient money in cash, in the sense in savings account or some liquid funds or cash, such that 9 to 12 months of expenses is taken care even if you don't work. So that's the first and foremost prerequisite. Second, life insurance. So you should have 15 to 20 times of your annual income as the maturity value in life insurance. This is a must. Typically, it is advised that you go for term insurance that you can discuss with your financial advisor or somebody who is good at insurance. The other important thing is medical insurance for yourself and for the family. And more importantly, debt-free. I know it is not practical, but at least you should reduce your debt as much as possible. And then whatever the loans or debts you have, you should have sufficient backing up to pay them off either monthly or at one shot or multiple shots. So the other prerequisite is to understand what is income and expense, what is asset and liability, and cash flow. So this is normal thing for any business, any corporate, and it is also important for each individual and family. So income and expense is very simple. What I do is download. Now all of us operate through banking accounts, cards, credit card, debit card, wallets, or So you can download these statements from your banks in an XLS, if you know XLS, and then start classifying. You can add more columns on what is the kind of expense is that, and what is a category, subcategory, for what purpose it is done, and all those things. Then you can analyze briefly on what is the kind of expenses you have and how much you expense for what category. Similarly, the income. Income is straightforward. You may not have too many incomes, so that is straightforward. You can easily classify. So similarly, list out all your assets and liabilities. So your assets being what we talked about, either your assets either in asset side or liability side, depending upon whether it generates any income or not. Cash flow is another statement which really talks about it is not sufficient to have just the assets or the income. What is most important is the liquidity of the assets, the availability of the money actually for you to use it on a regular basis. So you may have huge asset in terms of real estate and many other assets where it is not liquid. If you want immediately, you may not get it. So it is important to find out how to generate the liquidity, which is cash flow over a period. So these three things, please start learning about these things. And it's very simple. All three are very simple. So moving on. Okay, so this is kind of, Robert Kiyosaki classifies the people, poor class, middle class, and rich class people, how they look at the income, expense, and asset and liabilities. So whatever the income they get, they just spend it. That is the poor people, So they don't even worry about acquiring asset. So that's how he classifies people as poor. And the middle class, what they do is they think that they are acquiring asset, but actually they are acquiring liabilities. So what they do, the income, whatever the income they get it, they pay for the liabilities and they do the expenses. So they not only do the income is used not only for expenses, it is used to pay up the liabilities. So it is more burden for the middle class actually, because they don't understand what is an asset. So that's a point of Robert Kiyosaki, and we will try to understand a little bit on what is an asset, what are the various assets possible. That is the purpose of this particular session. The rich understand clearly what is asset, and in fact, whatever the income they get, they put it in asset which generates income, and then the assets generate income, further income. So they have double income, the regular income plus the assets generating income. Okay, so that's the difference between various classes of people, Robert Kiyosaki explains. Moving on. Okay, what are the various asset classes we know of? So these are some of the asset classes. Cash in the sense it is not just the hard cash, it can be liquid funds, it can be online wallets, it can be savings account. And commodities, so basically you can invest in the most prominent commodities are crude oil, gold, copper, wheat, and many other commodities. Fixed income, which is basically debt funds, you can also call it as debt funds. Basically your fixed deposits, bonds, post office products, and debentures. These are the typical fixed income or debt funds. Equity, this is the stocks. So here what you do is you buy the part of the company kind of thing, right? You all aware of Warren Buffett, who focuses mainly on investing in stocks. So this is another asset class. And there are many alternate investments. Like for example, many people collect very many artifacts, arts, antique goods, rare and vintage pieces. They collect it and sell it for huge amount. So this is also another asset class, but it is very, very, rare. It is not regular asset class. So these are some of the asset classes. We will try to see more asset classes going forward. Next slide, Krishna. Yeah, one of the important asset classes is the business. Okay, in business, what you do is that whatever the idea you have, whatever the business process you have, you start setting up your business, which obviously generates much more income for you. So this is one of the best asset classes one can have. So once you design your business process and understand the supply and demand, sales and marketing, here what you do is you leverage people's time and skill sets. When you are working for a company, you spend your time, that's it. Whatever the time you spend, that much money you can get, that much income you can get. Whereas once you start the business, you can scale it up. You can start your own business, you can do network marketing, you can do family business, you can start online business as well. So there are a lot of advantages in business. First and foremost, you can scale up and grow to a maximum extent. You can give job opportunities for other people, and there is a lot of tax advantage. In fact, the maximum asset which is getting taxed is your earned income, basically your job. When you are doing the day job, that is the maximum tax you pay. But business, you pay less tax. Next one. So starting a business is always a good thing if you can do it. The next one is real estate. This also most of us know. Here the real estate, there are multiple real estates, residential, commercial, and industrial. So here one can buy and sell. In fact, this is something Robert Kiyosaki does himself, and he very clearly explains very well that he doesn't put in too much money. He can get loan from the banks, maximum loan possible, and then buy it, and then do some value add and sell it for higher value, or construct and rent it out, residential or commercial or industrial, and get a regular income, which is used to pay the EMI or the liabilities addressed that way. You can get the rental, and there is a lot of tax advantage. If you buy real estate and sell it, you don't need to pay the tax immediately. In fact, you can use that money and buy a bigger real estate so that you don't need to pay the tax at all for quite some time legally. Okay, so this is the typical traditional real estate thing. So there is another thing called REIT, Real Estate Investment Trust, for people, because the traditional real estate, you need huge capital, either from your side or you have to get loan from the bank. When you get loan from bank, obviously they will want the security. Normally the real estate itself can be a security. But with REIT, here it is available in stock exchange. You can buy in whatever the minimum quantity available in stock exchange. So this is something really interesting. You can buy short-term, long-term, whatever you want to buy. For example, in Indian stock exchange, there are 2 REITs available right now, Embassy and Mindspace. So you can start buying these things either for long-term or short-term or medium-term. So this is the great advantage actually for many people. So moving on, fixed income. So fixed income is also called debt fund. Basically what it means is that you lend money to someone else for a particular period. So what you do is you lend to your neighbors, lend to friends and family and all. You don't know whether you will get back. Whereas there are some specific ways, particularly the corporates and government, they borrow the money from the retail investors like us, and they give you something called bond, debentures, and other forms like fixed deposit. That's where they give you the fixed return. Basically, whatever the money you pay to them, which is basically what they borrow from you, they pay periodic return, periodic interest they pay to you. So this is one of the relatively risk-free form of asset or investment. So you all know about fixed deposit. You go to any banks, you can do the fixed deposit. Bonds is issued by the government as well as the corporates. So it is backed up by securities. Bonds is backed up by security. Post office products are really good. You can go for that. It's typically like savings and fixed kind of thing, fixed deposit kind of thing. Debentures is like bonds, but it is not secured. So there they give higher rate of interest, depending upon the credit rating and the reputation of the company which issues debentures. You can go for that, but there is a risk involved. It is not backed up by security. So overall, it is less return but less risk. So what is important is that to look at, can it meet the inflation? So inflation is typically around 7 to 8%. So you are in India, I'm talking about. So your return should be more than 8% typically. That is what you should look for across asset classes. Some asset class can be low, something more. So you should mix and match it. Moving on. Right, cash. So as I said at the beginning, cash is not only the hard cash, it is also online wallets, savings accounts, and liquid funds. Liquid funds in mutual fund, you have liquid funds where you keep it. You can immediately withdraw that, either within a savings bank, you can immediately withdraw. Wallets also you can immediately withdraw. Liquid funds, it may come in 1 or 2 days. If you withdraw today, you may get your funds tomorrow or day after. So that's how, there the return, the interest rate is a little bit more. So here you should have sufficient money in cash, in the form of cash, particularly the emergency fund should be there in these forms. So here also, even if you have hard cash, you have challenges. So in any asset, whatever the asset you talk about, including the hard cash, there is always some risk or other. So you have to be aware of it and make sure that you allocate various amount or percentage of money into various asset classes. You should not keep it only in one. You should have in multiple asset classes. Moving on. Equity. So this is one of the important and best of asset classes. the risk is high, return is also high. So here it requires a lot of understanding. You cannot just blindly go and buy some stock and then think that it will give you return. It requires a lot of work in understanding. So people do fundamental analysis of various companies. They do technical analysis. They keep watching various news and market, macro and microeconomics. So it is not a straightforward thing. At the same time, we can also make it very simple. So you don't go and buy some random stocks. Instead, there are few simple approaches one can follow. Okay, first of all, stocks, there is a demat account and trading account. Many of the financial institutes offer it. Most of the banks offer, and there are non-banks also which offer this account. Once you open these accounts, you can start buying the stocks. So the stocks are bought in multiple ways. First one is IPO, initial offer, basically initial public offer. You can buy through IPO or private placements. Private placements is basically before the company starts issuing IPO, they can offer the equity or share to people. Secondary market is the majority one. Once after the IPO is over, the stock market, it's available for people to buy and sell. So that is where people really invest and do selling and buying. So one of the effective ways of investing in stocks is ETFs, the exchange traded funds. So what happens here is it is in the form of index or gold. Gold is also sold. Mute Shankar. Yeah. So here what happens is, for example, in Indian market, Nifty 50 is a ETF. So the top 50 companies identified by NSE. There are two primary exchanges in India: NSE, National Securities Exchange; BSE, Bombay Securities Exchange. These two are important ones. So Sensex is top 500 companies in BSE. Nifty 50 is top 50 companies in NSE. So what happens is they offer in the form of one stock which consists of all the 50 or all the 500. So you can buy that as the ETF. So that is the easiest and best way of investing for the starters. Instead of going and identifying what is the right company to buy, right stock to buy, the easiest way is to buy the ETFs. So the index ETF, there are many indexes. One is Nifty 50 Sensex. There is what is that, IT specific. There is sector specific, and there is a small cap, large cap, and middle cap. So all kind of ETFs are there. But Nifty 50 and Sensex is something simple and straightforward. You can go for that. So that is the easiest way to invest in equity. And the other one, gold also. Gold is also available as ETF. There is another thing which is called portfolio management system. There are many people who offer this, many financial institutes and non-banks. They offer. What they do is they open the demat account, trading account for you. Instead of you operating, they will operate for you. They will decide what to buy, what to sell, and generate the income. And they obviously take the commission or the fees for managing this portfolio. So they have minimum of, I think, 25 lakhs or 50 lakhs investment on this. So that is one system which is available. The other one is alternate investment fund. Here, it is much more flexible for them, but it is much more, the size is much more. I think AF is 1 crore, minimum is 1 crore you have to invest in this. So they don't limit to only stocks. They also can do private placements. They can also get into different kind of investments, even the derivatives. They can invest in derivatives, which we'll talk about it later on. So you need to have demat account, trading account. So stock market is highly volatile, and the risk and return is high, both of them. And obviously the taxes are relatively low compared to obviously your earned income. This is much, much low. There is a possible high return. So that's about equities. Moving on. Mutual funds. So this is another easy way for the retail investors and the starters, the people who are beginners. This is the easiest way to really invest. So what happens here is that the mutual fund house, they basically get money from you and they will invest internally with multiple equities. They can invest in equities as well as bonds. So basically equity and the debt fund or the bonds. So the combination of that, they will invest. So here the advantage is you can invest as low as 500 rupees in India. So you don't need to have huge amount. You don't need to analyze what is the right company to buy. The fund manager in this mutual fund house decides to buy what to buy, what is the right thing to buy. So here the return is decent enough, depending upon what kind of fund, because when it is equity fund, the risk is more. Debt fund risk is relatively less, but the risk is there everywhere, whether it is equity fund or debt fund or any cash, everything there's a risk associated with that. One needs to understand that. So it is a portfolio of stocks, bonds, and other securities. It is diversified. There is an expense ratio because there is a fund manager and there are many other entities involved in this. They will take away the expenses, and then remaining returns they will distribute to the investors. So there is a regular and direct method. Direct method is where you can directly open an online account with the mutual fund houses. There are so many mutual fund houses in India. You can open an online account and then you can start buying on your own based on whatever you understand or whatever financial advisor gives you. So the other one is regular, where it is through the financial advisor. So what is the difference? When you go through the financial advisor, obviously he may give very good suggestion, because the financial advisor knows many things. But what happens is he gets 1% of your total return, your total investment every year. So your return gets reduced. But when you are going directly on your own, you don't need to pay that additional amount. So that's about mutual funds. For most of the people, starters, this is the best way of investing into equities and debt market. Moving on, yeah. Derivatives. So derivatives is basically, it's based on the securities like equity, commodities, currencies, and other basic stocks. Based on that, they come out with something called futures and options. These are highly volatile, highly risky. So it is not at all advisable for the starters, the retail investors to get into it. So why I'm talking about it? Because many a times when some financial advisor or somebody who gives you a tip, they will say that you get into this, you can get quick money. No, you don't. This requires a lot of understanding, a lot of experience. So don't get into this till you really understand the financial market in and out. So that is the reason why I'm saying that this is another asset class and don't get into it. So that is the reason why I'm telling that here. So moving on. Same thing, hedge funds also same thing. In fact, here you cannot even get into it. It is like mutual funds for retail investors, mutual funds. For the real rich and corporate people, hedge funds. So what happens is it operates like mutual funds. So the financial houses offer hedge funds. So they invest in highly risky securities like derivatives, and they really go into different kind of investments which are absolutely risky. So there is the return is high, obviously, and the risk is also high. So I just want to say that there is something called hedge funds, which is similar to mutual funds. Mutual funds for retail investors, hedge funds for high net worth individuals and corporates. Moving on. Right, commodities. So commodities are like, the typical commodities are metals like gold, silver, nickel, zinc, and many other commodities are available in the market. Some people directly they buy, but there is something called MCX, Multi Commodities Exchange, that offers. Whenever you open your trading account, the MCX is also offered to you if you want. So you can buy the commodities, but the commodities do not avail. No, they are not available directly in MCX. It is available in the form of derivatives, futures and options. So hence, it is not advisable to go for the typical commodities like this, but it is important asset class. So when you really understand the financial market, once you really move towards the financial education and you have more money, then you can get into it. But for the time being, you be aware that there is something called commodities asset class, which primarily deals with metals, energy like crude oil, natural gas, livestock and meat, and agricultural products. So that's what is the information right now. Moving on. This is important class, gold. So here, typically people are aware of gold as a jewelry they buy, and sometimes gold biscuits. But there are other forms of gold available. I think, in fact, the better than buying the physical gold is in the form of government bond. So government of India or RBI offers the bond. So once you have any of this demat or trading account, you can buy directly from there. And it is also available as ETF, exchange traded fund. So it is like stock. You can buy gold in the form of stock in the electronic form. So like you buy a company stock, you can buy gold as a stock. Also, mutual fund offers index fund, gold index fund. So these are the best ways of investing in gold. So basically what you do is, when you buy this, the price keeps going up like the physical gold. And whenever you want to redeem, you can redeem that. In the sense, you can sell it and get the money you want. And then if you want to really buy the physical gold, you can buy from that money. So it is easier and safer. Otherwise, when you buy the physical gold, storing it, securing it is very, very difficult. Of course, you can buy sufficient gold for the jewelry purpose. Whatever you want to wear, please buy it. That's fine. But beyond that, for the saving, for the long-term saving and assets, do not buy the physical one. You can buy in the other form. So it is available as bond, as stock, and as mutual fund. Very simple and straightforward. Moving on. Right. So this is another asset class: arts, artifacts, antiques, and rare items. So this, I think, this is, again, it's not very prominent, but there are some people who really do it as a big business and big asset class. Again, this is just for information, not for you to really get into it. But you never know. In future, it may become much more prominent, much more easier to do it. Next one is intellectual properties. Again, this is very, very important, particularly the people who are working in corporates and creative job and engineering and many other things. You have to be aware of this. This is a very, very important thing to know. Trademarks and brands, patents and technologies, copyrights, and of course books. What are the books you write, you get the royalty from that. So similarly, the patent, if you really register, people who use it, you can get the royalty. So this is another important asset class we ought to be aware, and we should start utilizing. We are not used to this. Moving on to social media. Here again, this is a relatively new one. You can obviously monetize all these things. Internet, there are so many people, they reserve and buy the domain, and then they can sell it for more. Blogs, Facebook, Twitter, YouTube, LinkedIn, SlideShare, all these things are places where you can put in your intellect, you can add value, and then there is a possibility of monetizing. This can be another asset class going forward. It can be prominent. Moving on. This is the very new and very revolutionary asset class called digital currency. It is also called cryptocurrency. In 2008, there was a guy called Satoshi Nakamoto. He wrote a paper explaining the concept of cryptocurrency. So here the interesting thing is, in this, the government is not involved at all. The cryptocurrency is created among the set of people, community, and it can be utilized among them. and it is legal in many countries. It is not legal in many other countries, but in future it will become a one of the prominent asset class. You have to be aware of it. It's very interesting thing to be aware of. There are so many cryptocurrencies already available in the market: Bitcoin, Litecoin, Ethereum, Ripple. So many other things are available, but be aware of it. So don't go for it unless it is legal in the country you live in. Otherwise, there is a lot of fraud also. So you have to be aware of it. Even though it is very interesting concept, you have to be aware of it. It really went like anything. Some of the Bitcoin has gone up like unimaginable amounts, and it also came down. And of course, any such asset classes will keep going up and down. But overall, it was very good. Moving on. Right. So the graph explains briefly about what are the returns and risk involved. So higher the return, higher the risk. So cash, low risk, low return. Fixed interest, which is basically FD and liquid funds, those kind of things. Bond, it's relatively higher risk and higher return. Property is like little bit above that. Alternative investments is above that, and shares is at the top. And of course, the other ones I said, like commodities, cryptocurrencies, and all, much beyond shares. So here it only shows some of them. So you have to be aware of the return versus risk. It is not always this case. In fact, in some of the shares, you can identify some specific shares where there is a high return, but the risk is also less. So there are possibilities. So similarly, cash looks less risky, but it is also risky in demonetization time. It was a big risk. So that happens once in a while, but not always. But even otherwise, even when you have huge cash, it's very difficult to safeguard that. So you have to be aware of how to fine tune all this things. This is in general is like this, but it is possible that you can make some of the shares good return with less risk also. Right. So next slide, Sushma. Right. So here is the list of assets with alphabets A, B, C, D. So A for arts, B for business, C for cash or commodities, D for digital currencies, E for equity, F for fixed income, G for gold, H for hedge funds, I for intellectual properties, and of course the other ones are MRS, mutual fund, real estate, and social media. You don't need to really get into every one of them, but what is more important is this key assets, which I listed the right side. You should definitely get into each one of them, depending upon your situation. Fixed income, which is basically bonds and fixed deposits. Business, if you can start some business, nothing like that, you should. Real estate, again, which generates income for you. Cash is not just hard cash, it is savings, liquid funds. Gold, as I told you, there are 4 different ways of investing in gold. You should invest in that. Equity, you should get into that, but mainly get into ETF instead of getting into the individual stocks, the index ETF or gold ETF. Mutual funds, you should get into that. That is very simple and straightforward. So with this, I end the presentation here. We can get started with question and answers. Thank you.
Okay, great. Thank you very much, Rama sir. So I hope everyone has got certain idea on how the asset classes are vary from each other and how we should be investing, what all we should be looking at. I'm sure there are so many questions running in through everyone's mind. Thank you very much once again. It has been a great learning. And the book you referred to, Rich Dad Poor Dad, is an amazing book to read. That's the book which I had finished recently, and it has been a wonderful journey. And I also told my elder one, like, this is what this book tells all about, and she was listening to me carefully. So yeah, it's really an interesting book. I have whatever I have learned from that book, I have put it in a summary as well, because I liked it so much. It's really good book to read. Thank you, Ramaji. Jason, over to you.
Thank you, Rashma. Thanks, Rama sir. Thanks for the wonderful session. Before starting the question and answer session, I would like to take this opportunity to ask you two, three basic questions because I am learning about stock markets, the shares, and all recently because I am interested to invest in these things. So, as a startup, if you can give me like a checklist which I should follow. Basically, I'm looking on BSE and Nifty. So if I can focus on these two share markets, what all basic guidances I should take? That's my first question. My second question would be, do brokers play an important role in this whole share markets? Because when we are going direct to invest online, because there are a lot of online options like moneycontrol.com, they have a portfolio. We can start a portfolio on Money Control and then we can directly deal in the shares. But if we go directly to a broker like Geojit Finance or Bajaj Finance, something like that, is it necessary always that a mediator like banks are always involved? Obviously, we need a demat account to start a IPO and all, but stock markets sharing. But is it always necessary that a broker or intermediary is involved in this whole transaction?
Sure. Yes, Jason. Yeah. So yes, there is a need for a broker in between. We cannot directly get into the stock exchange, which is SEBI and the BSE and the NSE. They do offer for individuals also, but it is a slightly complicated process. So the easiest way is to go through the brokers. The brokers could be the banks. Each bank also has their own brokerage, and also the non-banks, like you said, Geojit. There is one guy in India, Zerodha, Zerodha. So he seems to be doing very well in terms of making it simpler. And see, you are one is he is required. He will get a commission. Whatever you buy and sell, he will get commission, right? So you ought to be aware of that. So many of the people charge huge commissions. So you should really compare and see who offers relatively good commission, and then also they should be stable and good companies. So in my experience, Zerodha is good in terms of commission as well as stability and the performance of the system. There are some people, the system is not fast enough. So there is one thing called upstocks that is also good, but there it gets stuck. Yeah. Okay. So the brokers are essential as of now, Jason. So that is given. Second, your first question rather, what you said is what are the guidelines when you are going to invest in BSE and the NSE? What are the things you need to be taking care of, right? So first and foremost is that do not follow the tips. There will be n number of people will keep coming and telling you, they will call you, they will send you SMS, they will reach you in all ways and say that you buy this, you buy this. Don't do it. That is the first thing, right?
Okay.
Second thing is, as I said before, if you want to invest in exchange traded funds first. So whether it is Nifty 50 or Sensex or few more indexes, you can decide if you want to get into IT index or auto index. No, there are so many, almost 20 different indexes are there. You can look at them and then invest that. There, the advantage is that it is automatically diversified. What do you mean by diversification? Let's say you want to invest in auto industry. If you invest buy one company's share, if that company goes for a toss, you will lose your money. But if you invest in 4 companies, maybe even one goes down, the other 3 give you return. Similarly, the industry level, if you buy only auto, then if auto industry itself, the market itself goes down, then you'll lose. So then you diversify across the industries, auto, IT, FMCG. So like that 4 or 5 industries you can do. So what happens is this Nifty 50 or Sensex, they pick up the companies from various sectors. And hence they provide one index. If you buy that index, you automatically get diversified in your investment. And if you look at the historical returns also, The return on index is really decent and very good. It is much better than many people who are doing PMS, portfolio management.
Yeah.
So I would say these are the two quick guidelines, Jason, and more we can talk about later on.
Yes, sure. Thanks a lot. Thanks a lot, Rama sir. Just one more question, Sushma. Sorry, regarding the commodities market. You have any view on the London Metal Exchange (LME)? If you have heard about LME, the commodities market, that is not actually the Indian market. It's an external London-based metal exchange. Do you have any idea on that one?
Yeah, so I really don't know. I have not dealt with them. But I am aware of London market as well as Chicago commodity market. So
Yeah.
these are all some of the very famous and important markets.
Yeah.
But I did deal with Indian MCX.
Okay.
But it is highly volatile, highly risky. Unless you are doing full time no trading, it's better
Yeah.
to avoid commodities.
Okay. Thank you so much. Thank you so much.
Okay. Anyone has any question? Somaji is driving, I believe. Any questions? Please raise your hand or type in the chat box. We'll be happy to take your questions. Now, what comes in my mind is, say, for example, now how you said about stock exchange, that broker is important and all. Same thing with cryptocurrency as well. Do we need to have a broker there, or we can deal, whether it is Bitcoin or Ethereum or any other cryptocurrency? Because I have seen, yes, you can deal directly, or you can go through broker as well.
Correct. So for the time being, you may have to go through the broker because it requires, you can go directly, but then you have to be a little bit tech savvy in cryptocurrency if you really directly deal with that. In fact, there are people who really full time dedicate and do that. It is very interesting thing. But again, you have to be very careful. Not too many reliable brokers are available in cryptocurrency. So you have to be extremely careful on this. As a starting, I think you may have to go through the broker instead of going straight.
Okay, great. Giri, thank you, Rama sir. Giri sir has raised the hand. Yes, Giri sir.
Yeah, thank you, Sushma. Thank you for your wonderful thing you people are doing. So many wondering things, and Jason Abraham, like Abraham Lincoln, and coming to Rama sir, our Indian legend Bodhidharma. We are really very happy to see you giving so many things for us financially. We are all entrepreneurs. We don't know how to handle the finance. We know how to focus the service to the customers like that. But you people are giving so many input. Today, the main takeaway is already I put it in that message. Even Sushma also commented that liability. We thought that all assets are liabilities like that. Today only we know that those which that asset creating income is asset. Otherwise, these are all liabilities like that. Actually, since we are an entrepreneur, still we don't know how to handle financially. Can you please brief something for us, sir? Thank you.
Yeah, thanks, Giri. So Giri, whether you are entrepreneur or not, and particularly if you're entrepreneur, you should have finance knowledge. I think when you are in business, the topmost thing is to know about finance, strategy, people management, communication, sales, and marketing. These are some of the important things, and finance is very important. So what is to be known in finance? I think, as I said at the beginning, those three things are the basic minimum: balance sheet, income and expense, asset and liabilities, cash flow. So those three things are essential for your business and also for your family. So that's what I would say as a starting point, Giri. After that, there are so many other things. The other things, you as an entrepreneur, it is also important to know about all these asset classes, and then see how to invest when you are getting your profits from your business. Where do you take it? One is obviously you will continue to expand your business, but also you can invest in some other asset classes which are giving much better return as well. So it can be parallel. So the starting point is those three things is what I would advise, Giri.
Thank you, Rama sir. Actually, still, as I am not feeling that I am an entrepreneur. I am in only that, self-employed. I can say that I have, I have to be the transformation to entrepreneur. So I am working for the in the system or on the system. Now only almost 3-4 months I have been traveling with 5am Club. Even though I am almost 2-3 years I was spending in training field, but this 4 months is a crucial period. I learned so many things from you all legends. So I am slowly implementing. I am getting some of the results also. Within next month I will get almost 50%, and January financial year March 2021 will be peak for me. After that, then definitely there will be 3 branches that I have to thankful. I have to be gratitude for only 5am Club, and especially to our legends, you Somaji, Ramasan, and you people are Sushma. Sir, I have seen so many people. Every day you people are coming and entertaining, and you are giving so many knowledge to us. So I am very thankful to this club. Thank you, sir.
Sure, thanks, Giri. So as you said, that 4 quadrants, what Robert Kiyosaki explains: employed, self-employed, business, and investor. So that is very important to understand that and move on to business and investment over a period. Thank you, Giri.
Thank you.
Sushma, do we have a time? I want to have a quick feedback.
Hello. Hello. Is it Vetrival?
Yes, yes.
Yeah. Okay, can you just hold on Vetrival because Somaji had raised the hand. I'll come back to you. Sure.
No problem.
Yeah. Thank you.
Yeah. Even Vetri is also okay. Only thing is I'm driving, so a little bit I'm not really okay right now. I just removed my mask.
Okay, thank you.
Thank you very much, Sushma, for taking all sides of leadership, and finance is the most important thing. And Rama is the best man to. And nowadays he is relaxed. He is not working for Infosys. So I think his presentation has got all the value and the new things. I just wanted to ask Ramaji one question. The number one question is that what do you do? There are many, as you said, you never go to any brokers who are small place people or anybody. Absolutely. That's one key thing. And what will do somebody who has already squandered or taken the money and some private company they would have opened, the company is already what you call gone. And how do you track these people? Suppose they have already sold and you would have even signed papers. They sold and transact and vanished. How do you track them? Any method is there? Anywhere you can go?
I think there are some grievances government has provided. If it is insurance, there is a separate body. For mutual fund, there is a separate body.
I'm talking about shares, only the
shares.
stocks.
For the stocks, there is a separate body. But the thing with the shares is that if they have invested and the investment has gone for a toss, it has become negative or zero. There's nothing, no law, nothing can be done about it unless they have done any fraud, like this guy.
Here investment has not gone bad; it is fraud only.
Oh, okay. Then if it is fraud, I think there is SEBI. SEBI has something to handle this, Somaji.
Okay, can be traced. That's what you're saying.
Yes. Okay. See, for example, Corby is a broker, so he started misusing the customers' funds and customer shares. and no, they have been no, taken for
I know that they have been taken.
question. Yeah.
Have been
So
cut into.
similarly,
No, there was something called
Franklin
a
Templeton.
BMA, a
Yeah.
Kolkata-based BMA, that
Yeah.
has been already gone from the industry, gone. So now there is no trace of how to track what has happened. According to them, there are no stocks at all. Stocks
See,
have been.
if they announced bankruptcy, again, there is nothing we can do. But if it is a fraud which can be proved, I think still SEBI helps in this.
Yeah, this is bankruptcy now, but at the same time, this was done a fraud by somebody before.
I know. See, they will show they do really internal fraud and they announce bankruptcy. So it's very difficult to handle that. Formally, they announced bankruptcy. In that case, it's very difficult to probe it through SEBI. It's a challenge. If it is bankruptcy, it is going to be a challenge so much.
Okay. Anyway, thank you very much. I'm actually ready for going for a meeting. So I don't know today our meeting is there. So I'm already late. Thank you very much. Sorry for taking the call from the car and I was having.
Careful, so much.
Yeah. Be safe. Thank you.
Yeah. Thank you very much. Thank you very much.
Right. Take care.
Thank you.
Yes, Petri.
Go ahead, ask question. Not question. I can say feedback. Thank you, Susma ji. Abraham, it's a fantastic effort every week you are taking, bringing great people. Especially.
Vetri, your volume is too low. Can you?
Yeah. Yes, sir.
This is better.
Thank you, sir. Happy to see in the forum. My wish is only simple. There's 17, 18 members should be 180, 170. That is the value you are bringing, and we should grow. Susma, we should work on that aspect also, because the people who are coming here enlightening us are not ordinary people. And personally, I don't have a question. I want to share it in the public forum because we are all people here, friends here. Every day, Rama sir is there in my gratitude journal because he touched the area which is very crucial for me, and he really spent good time. And wherever I go, I speak about him. Even my kids know that Rama sir, something like that. So thank you very much, sir, for being there and doing this work. My only wishes, only prayer is this number should go. I know that you don't want anything, but more people want you. You should reach more people. That's my only prayer. All the best to you, sir. Thank you very much in a public forum. I just want to express my gratitude.
Thank you, Vetri.
Thank you very much, Vetri. Yes. We all are in this together. So please, everyone help us to put this number up. It's not because we want high numbers, but as Vetri said, it's because we want people to learn more, to know more. And I would also confess here one more thing. Ramaji is in my gratitude journal every day since months now.
Thank you, Susma.
Susma, let us start a club. Rama's followers club.
Yes. Sure. There are many of people from our group which are already in my gratitude journal. Jason is also one of them. Though he doesn't know, I never said. Okay, Kamal has a question. Kamal, please go ahead.
Hello, yeah, Ramasa. So just one generic question. I never invested in gold, but now my wife also always say, have some gold, have some physical gold. So now Diwali is coming. So again, the generic question, like, which is the best way to invest in gold for a long term? Because I don't believe in hard gold. It's instead of some mutual fund or ETF sovereign. But I never invested in that. It's always in the form of metal only. So what do you suggest?
No, it's good to get started. So one is either ETF in a stock exchange, or index fund, gold index fund and mutual fund. These two are the easiest and flexible and long term as well. You can start with that. The government bond comes once in a while. It is not always available, but these two are always available. Any day, anytime you decide, you can buy this. So my suggestion is go for these two: ETF, gold ETF, and index fund and mutual fund.
Okay. And how much of percentage should be there as a part of gold overall?
Overall, if you take the overall, it could be around 5%, I would say. You can go up to 10%.
That include metal also. If we have
No,
some.
I'm saying only gold. 5% is a good thing.
Okay. Thank you, sir. And other than gold, any other metal? Because now the people are investing in platinum also.
Yeah. So even though gold is commodity, that is very special because that has been there always, right? So investing in gold is always good, no question about it. But the moment you look at other metals, it gets into the commodities. So that is risky. So it is not advisable to do that at this point in time. Once you have a sufficient experience, sufficient education on finance, sufficient time spent in it, and so you have sufficient money, then you can think about it. Right now, I wouldn't suggest any other metal or any other commodity.
No, thank you, sir. Thanks a lot. Thanks, Sushma. Thanks.
Thank you. I would highlight something which Ramaji had explained about REIT. Yeah, so in fact, I was not aware of it, but I'm working with an organization since past 1.5 years, which is into REIT. So yes, since then I have learned about REIT, and it's really interesting to know how it works. And I'm very I was surprised, like, okay, this is also there, which I never knew. So yeah, we don't know many things. We know very small percentage of what we know. So yes, thank you for
little more words about REIT. Can we also know little?
So if you want to invest in real estate, the easiest way and better way is to start investing in REIT, like gold ETF. REIT is also available in stock exchange.
Thank you, sir. Now I remember.
Okay, great. So it has been a great session. Anyone has any question or any feedback, please let us know. You can go ahead, or else we'll be closing the session soon. Anyone wants to say anything? Taki, are you there?
Yeah, I am here. I was a bit busy today, so.
Yeah. Okay. Thank you for being here, Taki.
Yeah, thank you. So,
okay.
I know it was more beneficial for anyone. This Ramasars.
Oh yes.
I couldn't attend.
For you, special sessions are available, Taki, whenever you want.
Yeah. I know. You are ready. Thank you so much.
Rama sir, just a quick question, Rama sir.
Yes.
Regarding the currency market,
yeah.
For example, the dollar, Indian rupees, and all currency market, how good is it to invest on currencies? Because I hear that, I mean, as a part of my learning, it's based on the oil prices. I think the dollars and the oil are, it's based somewhat related. So the fluctuation of oil and the fluctuation of currencies, is it good to invest in currencies right now, or?
Yeah, so I forgot to include currency as another asset class. It is another asset class as well, actually. So currencies is, yes, it is good, but the thing is, it is highly volatile and highly risky and very, 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 very fast. So for you, if you are working, normal working person, it is not advisable to get into it. It's highly volatile. You can make money, but it is short term. Unless you are a full-time trader, it's not good to do it at this point in time. Or you become really well versed in all these things, then you can attempt. Right now, do not attempt that. It's a good market. You can make really quick money. You can within a second you can make money. You know, if you have attended Ravi sir's sessions, you would know. Can you mute, Prakti? Yeah. So he online also he demonstrates how quickly it goes up and down, and you can make money, quick money. But it is highly risky, and it will really you can make money, but then it can really put you into lot of challenges. So I would advise not to attempt that right now, Jason.
Thank you so much, Dash. Thank you so much.
Yeah, and also to answer your question, yes, it is related to currency market, is also related to many other aspects, including the oil. And similarly, there is a linkage between gold and stock. So if there is an inverse relationship between gold and stock market. If the gold goes up, the stock market comes down, and the other way around. So there are a lot of interlinkages among various asset classes. But in future, things will change. Instead of oil, it will be electricity, right? If everything goes electric vehicles, so the importance of oil will come down. In fact, some of these things can become commodities, like your pure water, pure air, and electricity. They can be coming under commodities trading in future. In place of oil, these things can take prominence in future.
Quick question before winding up the session. Rama sir, do you think that this trading factor over the stock market is actually increasing the consciousness or the eagerness, or we can say, is it affecting the health of the human person's mind and brain? Because every time he's confused, or maybe he's actually looking forward, what will happen in the future, what will happen. So is it like negativity, any impact is there for a human person or the human brain?
Definitely. The moment you get started with your trading, your psychology is completely affected. In fact, no, it is a vice versa. Your psychology can affect how you trade, and how you trade affects your mind and body as well. So many of the great traders have a lot of psychological and health issues. So it is a challenge. It is a big challenge. But there are some people who trade very coolly. In fact, no, I myself do sometimes little bit cash trading. Basically the stocks, directly stocks, only blue chip top level stocks. Sometimes I do sell and buy, but absolutely cool. Mine is, I do at my own pace, my own thing. I don't really get stuck with all these things. But by default, when you get into trading, there is a high pressure on your body and mind. So you should really take care of yourself if you are getting into that profession. Proper precautions to be taken care. Not to say that you don't get into it. You can get into it with awareness and taking care of your body and mind appropriately.
Thank you. Sushma, I think it's time to wind up.
Yeah. Great session. So much of great conversation. So much to learn from others. Others' questions give more insights, actually. So thank you, everyone, for asking the questions. And I don't see any hands raising up, or anyone wants to say anything. The chat is also, everyone has thanked you, Rama sir, for the wonderful session.
Thank
so
you.
Yes, great.
So Sushma, next session I am ready for income types. See, today we have only one or two incomes.
Assets.
So there are multiple incomes possible, which I would like to present whenever possible.
Yes, sure. That's really great, Rama sir. Thank you very much that you have said yourself, okay, yes. So we'll be ready with the income side now for next session. Thank you very much. Okay, so we are good to close our session. I believe just before that, I would like to thanks once again, Rama sir, and I would like to introduce our next week's speaker, which is, okay, I need to open my presentation now. Sorry, guys. Give me a minute, please. Jason, if you can just have some conversation.
Yeah. Okay, so I think Sushma will take some time. Before that, Rama sir, how was the journey in Infosys? Small
Oh, okay, it's
snap.
beautiful journey. In fact, particularly, see, most of the Indian companies, what they have done is they have really made use of the opportunity during late 1980s and 1990s and 2000 specifically, Y2K and all those things. So it was an excellent opportunity, and the top guys, Narayana Murthy, Asim Premji, and the Tata group, they've really taken advantage of. But one thing they have all not done properly is that making use of the talent for coming out with software products, right? So we had an excellent opportunity to come out with the software products. It is the same guys, the Indians who are sitting in California and coming out with the products. But we could have done it in India, right? We would have been top leaders in the India, which we are not done. But interestingly, I in Infosys, there is one, in fact, whole of India, if you take Indian software companies, really one of the big and really great software product, not many people have it. One such product is from Infosys called Finacle. It is a core banking product. Banking, it covers the complete banking functionalities, core banking, internet, mobile, treasury, everything, all the aspects, mutual funds, investment, everything it covers. So luckily, I was in that division, and it was because of Nandan Nilekani it was surviving. Otherwise, that the board, every year the board used to review, and will be the Finacle, the banking product used to be always negative. So the board will say, no, let's close this. But Nandan Nilekani always stands up and say, no, it is required. It is very important. And today we are all proud that this is one of the greatest world-class banking product available anywhere in the world. Any bank which wants to select a core banking product, Infosys Indian Finacle product is always looked at and evaluated. So I was part of that throughout my life in Infosys. So I'm proud of that.
Amazing, Jay.
Great. Thank you, Rama sir. Thank you, everyone, for being here at this hour of the time. And so we close this session, and I'm just giving a small brief about the next week's speaker, who is Maha Zahid. She's the People and Culture Manager. She's basically an HR professional, and she'll be taking next week's session. The more you will see more details in the flyer, which will come up soon. So, Rama sir, once again, closing this session at the note of a big thank you to you. Thank you very much.
Thank you very much.
Thank you, Jason. Thank you, everyone, being here.
Bye-bye.
Okay. Thank you.
Thank you. Bye. Have a nice evening.
Bye-bye.